What's up everybody? Tom here with another video. In today's video, we'll be talking about why this chart is heating up or just getting started when it comes to a big move and big possibilities. We'll also be talking about our technical analysis levels for the Sp500, Nasdaq, Bitcoin, Tesla, Russell 2000, and dollar index. There's a lot to cover in this video, but it's going to be good. Stay tuned. So as we like to do as a community together, let's take a look at what happened in the S&P 500 over the last 24 hours. Well, it wasn't that much really. It was basically a day of little moves across a lot of the sectors. Things like Roku though, and some other hyper growth stocks did do well. You also saw up here on the top right hand side, Starbucks, McDonald's, all these recovery plays in terms of restaurants did have a nice kind of movement through them. When we take a look at the indices, this is what happened. Straight away, you'll notice there was a little bit of exuberance in the morning for things like the Russell 2000 with some strong growth out of the gates. And then by the end, it was all flat to just basically through the middle. And this makes sense because we were at a point of heavy resistance yesterday in the Nasdaq, in the FANG, in, of course, the S&P 500 as well. Let's have a look through the actual sectors. Again, mismatch of everything. Utilities slightly up. Usually if utilities are moving too aggressively over a series of days, it means people are starting to hedge in because utilities are seen as a defensive sector, but I wouldn't get too worried about them being up 0.53% on the day because what was the second highest sector? It's XLY, consumer discretionary, often associated with growth and yeah, not one that we need to be worried about right now. Today, we're going to get straight into the technical analysis together because this is where it's at right now. And our premonitions about the US dollar index are coming true. US dollar is continuing to weaken here into that next level and it's coming down pretty hard and pretty fast. So we had this here from yesterday. It's around that 92 zone. This is where we expect the US dollar index to probably come down to, and this has meant a little bit of risk on in the markets. So we had that initial drop through during the live stream, and then we had the same drop last night during the live stream. Two very tradable opportunities on the dollar index and the associated currency pairs if you'd like to trade currency. Nowadays, we're looking at moving it down to 92 though, and then I would expect some support to be found here by the dollar index, and I think it's all going to time very closely up with things like gold, with things like oil, etc, etc. Let's get into Bitcoin quickly because Bitcoin is still stagnating around this just under 60,000 level, 57,628 at the time of recording of this video. And I tell you what, it really is doing nothing. And this means that you really have to trap Bitcoin right now. I'm going to trap it between the 57,000 and the 60,000 area. And the reason why I'm trapping it is because even little things like the double bottom yesterday, they're not playing out correctly. Like this should have moved towards 60,000. I said yesterday, I don't think it's acting as technically as you think. And I don't believe it will until it gets out of the range, whether that's a closure below 57,000, which will expose 54,000, or whether that's a closure above 60,000, which will expose, of course, 65,000 plus. I'm not really too sure which way it's going to go at this point, but it is in a channel, in a range, and these are the two critical levels that you'll want to have on your charts. A close below 57 is bad, and a close above 60,000 is, of course, good if you're a bull, because I don't think that the next level is going to be over here. I think it's going to go much, much higher. Remember, it's all about that coiling before a key level. When it breaks out a key level, it usually explodes, and it explodes in a very, very big way. Let's move over to gold, probably the most exciting chart on the charts at the moment, and that's because of this weekly point here. You guys know I like a bit of follow through, and that's what we're getting right now. So we had a weekly hammer candle, or pin bar as many people will know it as, and now we're getting some follow through action. If we go down to the daily, there's no way that you can't paint this as a double bottom. It hasn't really come into play because remember, a double bottom only starts when you actually get through the closure point, but everything on gold is starting to point to bullish action, and 1760 is the critical resistance line. That's the line that every single trader is looking at right now. Once it gets through 1760, 1800 will be the next area. 1850, 1900, and you'll notice I'm saying $50 increments because all of them have some support resistance. Everything in between there is noise, and it will go towards each $50 increment. So gold's probably the most exciting actual chart that we're looking at right now. It's funny how it happens like this. Commodities become boring, and then suddenly commodities are just about to flick that switch and become a lot more interesting. I'm certainly excited for gold over the next week. Let's see if something big can happen towards the bull side. US oil, another one of the sleeper hits at the moment. People have stopped talking about oil for some time now. I think it's in a big channel, and I thought, well, I've got to tell the community that it's in a big channel right now so you don't sleep on it. A lot of people were sleeping on Google. A lot of people are sweeping on Apple, Amazon, all of those big FANG stocks. We were talking about as a community as being the strongest area coming into this recovery phase in tech. And guess what? It certainly was. Again, oil in the channel range. We've got resistances, we've got supports, we've got resistances, we've got supports. We've got everything going on here. Again, it breaks out to the upside. What's going to happen? Oil's going to explode. Breaks out to the downside. Technically, oil's going to explode to the downside. So there's a key bit of consolidation coming out of that Suez Canal issue and everything else that's going on in the world. And I think it's worthwhile having on the charts, always knowing where things are and setting alerts. So that's a little bit of an oil update for those oil bugs out there. 691, or oil barons, I guess you'd say. 691 on the close for Tesla. A little bit disappointing. Basically a zero-sum game yesterday. It closed 0.08% higher. That's not enough to get me excited. I would like to see above 700. 700 is the key area. You know that the resistance here is real, and once it closes above there, we expect it to go to 720 fairly quickly. And I've mentioned it several times on the channel. Any closure above 720, I believe, begins a very nice participation phase in the market where people get a lot more confident in Tesla, and it pushes up to that 800 support, which will act as resistance. We'll continue to cover it on the channel, but it doesn't look bad. I mean, nothing here looks bad from a technical bull side. There's no bears really in town or anything like that. It's just that it hasn't continued on after that good bit of news, or at least what the market was perceiving it as. So we'll continue to cover the story, but nothing right now in Tesla. Let's have a look over here at the Russell. So the Russell pulled back a little bit yesterday. Still looks very strong, but I do see it potentially doing something like this where it pulls back into these two moving averages, the 20 and the 50. When you have the 20 and the 50 on a daily or a 4-hour close together and the market pulls back into them, what's it going to do? This acts as what we call dynamic support. So basically it acts as a bouncing board for the market to buy off. And because we have the previous resistance peak over here, that will also act as further buying pressure should it spike down during that. So remember, it's like having a cushion or padding in your technical analysis. If it comes down, then you've got your padding and your springboards to allow it to go back up, because algorithms, people in general, and just basic human psychology is going to pick up all these levels. So the lightning bolt's still in play. I don't see any real problems with this over the medium term here for the Russell. It looks like it wants for that 230. That's where that kind of previous resistance has been, and maybe even all-time highs. This is the type of setup, that lightning bolt, that you do like to see, and it all comes back to the weekly. Remember, check your top-down analysis. Because of these strong rejections, you've got to feel a little bit of confidence that there is a lot of buyers around that 208 area, and those 208 buyers, they're going to be committed to potentially adding and accumulating to their order. So that's why I like these weak rejections. It shows a very strong bullish intention in the markets. Let's check out the FANG. The FANG has been one of the stronger indices at this stage, and you can see here that it's closed above, and then we've moved into 4,700 territory. We found some resistance. It makes perfect sense. It's going to be resistance, its previous point, but it held very well yesterday. So that could mean that we're moving towards all-time highs. I mean, that hold where it just sits there, the more it sits there at the top and just resets all of the indicators from overbought, of course, back into the middle range, if it can just sit there for a couple of days and then move up, you know the market's very strong because it's been unable to sell down through any bearish kind of pressure. So FANG certainly looks very good, and all these breakouts are consistent with what we've been seeing across the Nasdaq as well. Speaking of the Nasdaq, inverse head and shoulders still in play. Our bigger target here is around that 14,350 zone. It's moved up pretty aggressively. It moved up into the 13.6 zone. That was going to be the first point of resistance, similar to what we just talked about with the FANG. lots of consolidation, allowing for the 20 exponential moving average on time frames such as the 4 hour to catch up with it. This is the type of thing you want to see. Again, from a strength standpoint, there is always the possibility that the NAS comes back down to this area, but because it's a 1, 2, 3 resistance, so there's been 3 resistance spikes, this is the type of area I expect buying pressure to occur at, and then for it to move back up. So things are still looking pretty bullish on this chart. Not much else to say at this point other than the inverse head and shoulders is in play from a technical standpoint. Let's now have a look at the S&P 500, of course, the most important chart usually on your chart techniques. And this S&P 500 is really lining up to go to our community's trend line. This trend line has been amazing. We've been using it now since December last year to predict pretty much everything to do with the markets. It's been quite strong. We've been using moving averages on the bottom end and of course our horizontal support resistance as well. But yeah, 4,073. It doesn't look like it's stopping anytime soon. It really is just going to be driven by tech. We can see the rotations come back into value. The rotations come back into recovery plays, let's call it. And now technology will be the driver for the S&P 500. If tech continues to run, expect the S&P 500 to continue to run. Is it pretty far away from things like the 4 hour 20 moving average? Yeah, you can tell it is. Look, if you go back through history, it has these spurts, but then it will start to consolidate when it moves too far away too quickly. So are we too far away? I would say we're getting a little bit close to being too far away. And if we have another spurt up and let's say we hit the community trend line, then yes, I could see it coming back down to hit at least a 4 hour 20 exponential moving average. Remember, as always, do your analysis on the SPX or at least the SPY codes, the real market, not on the futures markets, guys. They give you false levels. Remember, futures market trades a lot of the time, whereas the real market trades when the big volume Wall Street are out to play. If you enjoyed this video, please remember to subscribe. Of course, hit that like button. We'll see you in another live stream tonight. Tonight, starting 1.5 hours before pre-market open here in the US, and it's going to be a good one. We're going to be covering crypto, we're going to be covering commodities, and of course, stocks. Can't forget about stocks on this channel. Speak to you soon, guys, and we'll see you there. Bye for now.